4, 3.
Hello, good morning, good afternoon, good evening, wherever you might be joining us from. Welcome to this pension Q&A for separating staff. I'm Denise Gustin-Gardella, joining you from the Pension Fund's Geneva office, joined by my colleague Dilbar Muradova, who's joining from the Fund's New York office. And this is actually our first real session of a Q&A only town hall. So we won't have slides to show you. It's really meant to try to answer as many questions as possible for those of you who are separating soon. And if you do have the need to refer to some materials, we've got in our chat a link to the previous town halls where you can find the presentations and the recordings if you would like to follow that at another time. So we will open the Q&A, and you're welcome to put your questions there. Please do be mindful that it's best not to put anything very personal or specific in this Q&A, because we will be publishing it for everyone to see, and we will not be able to answer something that would require us to look through your file. We wouldn't be able to do that during this session. So if you have something very specific that might not be able to be answered today, we would recommend that after this session, if your answer's not given, that you can submit your question to us at the Fund by using the Contact Us form on our website. So we'll do our best to answer as many questions as possible, and please be aware, of course, the Fund's regulations and rules are the authoritative source. We will do our best to answer as completely as we can. If we don't know the answer, we'll honestly just tell you we'll have to, confirm something. But I think we'll be able to help answer quite a few questions during this 2-hour session. So I can welcome Dilbar. You can take the floor, maybe answer a few questions already.
Thank you, Denise. Good day, everyone. Welcome to today's Pension Town Hall session. We've already received some questions, so I published a couple, and I'll go over them now. So the first question is, how long does it take to receive our pension once you separate from service? So when you separate from service, we will require 2 sets of documents, one from you and one from your employing organization. Once we receive those documents and they're duly completed, we will start reviewing your file. If there is no discrepancy identified during the process, so if you've completed your forms correctly, and there are no missing documents, then it takes the Fund approximately 15 business days from the date that we received the last required documents to implement your benefit and to put it into payment. The common mistakes that I see these days is normally comes from the staff member themselves. So for example, when completing your payment instruction, I see that in most cases, the participants submit 3 pages for payment instruction form for those who separate with more than 5 years. So just make sure that you know exactly what pages you need to submit depending on the choice of your benefit election, so that we can start processing your benefit as soon as possible. And also be clear on the types of documents that we require from you, depending on your particular situation. The second question is, after separation, when the pension fund finds some documents missing, will the fund inform the retiree? Yes, once we start reviewing your file, if there are any documents that are missing, or if you, again, completed your payment instruction incorrectly, we will reach out to you, informing you of what is needed for us to move forward with processing your benefit. Denise, over to you.
Okay, thank you. I have 3 questions I've published. So the first one was, my contract ends at the end of the calendar year. When should I begin the process of claiming my pension? So it's good that you're already thinking and preparing. If you're separating at the end of December this year, I would suggest that you become familiar already with the separation process, which is detailed on the separation page on our website. And in May, you will have your 2025 annual pension statement available for you to review. That was one of the other questions, but I would suggest that you can already review the 2024 statement, and then in May review the 2025 statement, register with member self-service, and run estimates already. You can do this type of preparation already if you want to become familiar with what your pension benefit options will be at the end of the year. Then I would say maybe 3 months before your separation date, you could already start getting the forms ready that you'll need to submit, which will be a payment instruction form, a supporting bank document that shows your name and account number, and make sure you have a valid ID document with your signature and photo on it. And if you're married and or have children that are eligible dependents, that you make sure you have your marriage certificate or possibly divorce decrees and birth certificates of your children, because we'll ask you to send copies of those with your separation documents. So you could already start doing some things, but just be mindful that even if you submit your separation documents to the fund before you actually separate, we will not be able to process your pension benefit until we receive the separation documents from your employer, and those will most likely only be provided in the month of January at the earliest. So, but we have this question and answer session, and we will have more town halls throughout the year. So I would also suggest you keep your eye on that, our schedule, and then you could attend presentations if you think that would be helpful, or just consult our website for information. Then I had another question. When a staff member exhausts their period of sick leave and their appointment is terminated, do they automatically become entitled to a disability benefit? I'll just answer part of the question at a time. So this question is about the disability benefit, which is one of the benefits payable by the pension fund. You are not automatically entitled to a disability benefit if you're terminated. A disability benefit is granted once it's approved after a review by the Staff Pension Committee. So there would need to be an application for your eligibility for disability. And the question is, how is this benefit calculated? It's calculated as if you worked up until your normal retirement age, even though you would be separating most likely before that age. Then the next part of the question is, when the individual reaches the applicable age threshold does the benefit become a permanent disability pension. So if you're approved for disability, you have to exhaust all of your paid leave entitlements before you're separated from service. If you're terminated and then you apply for a disability benefit and it's granted, then you would start receiving the disability benefit from the time it's approved. The age, depending on when your benefit would be approved, will sometimes affect whether it's a permanent disability benefit. So if you're at least age 55 when your disability benefit is approved, then it's normally granted for life. Otherwise, it's often the case that a disability benefit is granted, but it has a review date, maybe a couple of years or 5 years. But at that time, it's important to give medical reports and then the case is reviewed to see if the eligibility is still there. So once it's approved for life, then it is paid for life. And once you've been approved and you reach age 55, then it's generally approved for life. The next part of the question, what about the lump sum? Is it possible to withdraw? So if you're approved for disability and you're already at least your early retirement age, the fund will give you an estimate of what your benefit would be, and you would see that with the disability benefit, it's a monthly benefit only. And if you're already at early retirement age, you could opt to just take an early retirement benefit, even though you've been approved for disability. With an early retirement benefit, you have the option of a lump sum, and the rest is a monthly benefit. So only in that case would you have the option to take a lump sum, but you do not have any other possibility of taking a lump sum if you receive a disability benefit and separate before you reach early retirement age. Okay, the next question I'm going to go to is, when we run estimates, are the data for 2025 available now? In December, we learned that there was only 2024 data to run estimates. And yes, it's still actually, we're still actually in the process of reconciling the 2025 data. The data would be available for you usually in May when the annual pension statements are published in your member's self-service account. That would then be when you can run estimates, and it will include the 2025 data. So that's all I had for that, and Dilbar, I'll hand over to you. Thank you.
Thank you, Denise. We received a number of questions on the deferment of choice and its implications on the benefits payout. So the first question is, if I separate and qualify for early retirement, but only want to start taking my benefits, say after 1 year, how do I go about doing this? So everyone who separates from service have an option to defer benefit payout or making benefit election for up to 36 months. So if at the time of your separation, you have already reached your early retirement age and you have vested pension rights, meaning you've contributed to the pension fund for at least 5 years, then for you to defer the payout of your benefit, you need to fill out page 1 of PENS E7 form, which is your payment instruction form applicable to your case. You then, a year later, should contact the fund with your payment instruction form, now filling out page 2 and page 3 of the PENS E7 form, letting us know where you would like to receive your pension and whether or not you want to receive a lump sum. However, please be informed that we will then make the retroactive payment of the benefits that were due to you at the time of your separation, because you were eligible to receive an early retirement benefit, and the eligibility starts the day after you separate from service. So we'll pay you retroactively for the month, for that 1 year that you did not receive your pension. The second related question is, what if you, there was a question about a withdrawal settlement. So if I do not manage to be reemployed by the 3-year deadline, when is the deadline to ask to withdraw my pension contributions? So if you are eligible to receive a withdrawal settlement, and please know that if you have vested pension rights and at the time of your separation you have reached your normal retirement age, you will not be eligible for a withdrawal settlement. For you to claim a withdrawal settlement, which is a one-time payment, consists of your contributions and interest that you've earned on this contribution, you need to separate at least 1 day before reaching your normal retirement age. So if you are entitled to a withdrawal settlement, and if you have elected to defer the payout for up to 36 months in hope to find another employment in the UN system, and again, becoming a pension fund participant, if you see that this is not happening and you would like to withdraw, you can claim that withdrawal settlement after the deferment period, after this 36 months passes. However, please be mindful that you will have 2 years after the deferment period ends, which is 5 years after you separate from service, to claim that benefit. If you do not come to the fund and submit your payment instruction form, you are risking to lose the right to that benefit. So if you come forward to the fund 5 years after you separate from service, claiming your withdrawal settlement, we'll still pay you, but we will need additional documentation, like an explanation why you did not claim your benefit earlier. Also, something to be mindful of is if you, at the time of your separation, if you have at least 5 years of contributory service, and you elect, or if you wish to defer making a choice, a benefit choice or benefit payout for up to 36 months, and we do not hear from you within that deferment period, we then will assume that you have elected a deferred retirement benefit. So we will assume that you elected a deferred retirement benefit that is normally payable at your normal retirement age. If you later come back and say, well, I don't want this deferred retirement benefit, instead I want to receive a withdrawal settlement. If that benefit is not yet in payment, we will convert it into a withdrawal settlement and will pay you a withdrawal settlement. However, if you have attended our previous session, you know that those who have received a withdrawal settlement and later come back into funds participation do have a choice to restore their previous contributory service and make it part of their new participation. However, in this scenario, where if we deemed that you have elected a deferred retirement benefit, and later you come back and ask us to pay a withdrawal settlement, and we pay you that withdrawal settlement, if you later come back into funds participation, unfortunately, you will not be eligible to restore the previous service and make it part of your new participation. So just be mindful of those little details. Then there was a question about whether or not somebody can receive payments of their monthly pension into 2 different bank accounts? And the answer is no, we can only make it to a 1 bank account. Then the question was about what if you get reemployed when you move, leave one UN agency and move to another UN agency. Is there anything the pension participant need to report to UNJSPF? So the question is about timing. If you elected a withdrawal settlement, for example, if you're separating today and you elected a withdrawal settlement, and you have found another employment in the meantime, normally the new UN entity that you're employed by will send that information to the pension fund. So there is nothing for you to do in a sense. But however, if you want to make sure that we do not process your withdrawal settlement, because it takes time for the fund to receive that information from the UN agency, then you need to notify us. In addition, if you, at the time of your separation, elected a withdrawal settlement, and then you find another employment within 36 months with another member organization, and the fund is informed, we will cancel processing of your withdrawal settlement and will assume that you are continuously participating in the pension fund. That's all, Denise, from me. Over to you.
Thank you. Let's see, I'll try to find my questions. Okay. I had a question about someone who is separating in July or separated in July 2024, and I think you touched a little bit upon this in your answer, Dilbar. I'm just trying to find the question. Okay. The question was about re-entering the fund. By when do they need to have to re-enter to have the continuous participation? There was no exact date given, but let's say you separated on the 15th of July, 2024. You would need to be back in the fund by the 14th of July, 2027. So there's not really any flexibility in the 36 months. It's from your separation date to your re-entry date. Let's see, I think I found the question. So if I freeze my pension with the understanding that if I re-enter within 3 years, I can resume my contributions. So yes, if you re-enter within 3 years, that means that you've got a contract that renders you eligible to participate in the fund when you re-enter, and that it's within 3 years of your separation from service and from the fund. Then you would resume your participation, and you would just have that period in between contracts which did not have any payment of contributions. Then the question says, by which month, year would I need to have signed a new contract? And is there any flexibility with time if the recruitment process takes long? So again, the main point is that you would need to have a contract that would make you eligible to participate in the fund. So that means a contract of 6 months or longer for an initial contract when you return to service. And if that start date is within 3 years of your separation date, then you would have the continuous participation. Otherwise, you would have a new participation that would be separate from the previous one. Then we had a question about if I select the lump sum and return to the system within 3 years and return the whole amount, can I continue with the UNJSPF? So I'm assuming this question means actually the withdrawal settlement, so it's a one-time payment of your contributions and interest. If you take that payment and you return within 3 years, so you're back in the fund, you have a contract and you're back as a participant in the fund, you can return that money, and that's called restoration. And you need to do this within your first 12 months of re-entering the fund. We do have a strict deadline for that. So you can return the money, and then those years of service that you were paid out for will be returned to your current participation. Then we have a question about, I'm planning to resign at the age of 57.5 years old. Can I defer my entitlement until I reach 58? So without knowing if this person has an early retirement age of 55 or 58, just generally speaking, your entitlements are determined at your separation date. So let's say your early retirement age is 58. If you separate from service at age 57.5, then you're not entitled to an early retirement benefit. Your entitlements would be determined on that date. So depending on how many years of contributory service you have, you would have either withdrawal settlement only, or a withdrawal settlement, or a deferred retirement benefit. So if you have at least 5 years of contributory service, you would have an entitlement to a retirement benefit, which you could ask to start in payment when you reach age 58, if that's your early retirement age. So without trying to cover all the different scenarios, just please be aware that you need to think about what is your entitlement on your separation date. And you can see what those options would be when you run an estimate in Member Self-Service and you put in the separation date, say when you're 57.5, and then you'll see whether you will have only a withdrawal settlement option or maybe other options available to you. Okay, I'm going to the next question, which is, my last day of work before separation is exactly the day I reach my 5 years of contributory service. This makes me a bit nervous. Is there anything I need to do to ensure that I will be eligible to receive my retirement benefit? Well, if you have been consulting your pension statement every year and you see that you definitely have the number of years of contributory service at your date of separation, then you would be eligible for retirement benefit. But I would say, because your case is very specific, if it's really that close, you might want to reach out to the fund and have us review your record to see, because yes, if you were going to be 1 day short, then you might want to speak to your employer and see if you could maybe have have some extra period. Maybe some organizations allow you to have a leave without pay period, and you pay extra to meet the number of years you would need to be entitled to a retirement benefit. But yeah, I think that's what I would suggest to you. Check your annual statement, and then also please reach out to us if you would like us to review your record with you. Then the next question, I will be separating after contributing in the pension fund for 19 years. 51, I've opted for deferred retirement benefit. Will I be eligible for reduced pension at the age of 55? So yes, you can choose a deferred retirement benefit, and the earliest that you can ask for it to start is at your early retirement age. If that's age 55, which I'm assuming it is, then that is the earliest that you could start receiving your deferred retirement benefit. So when you do the estimate, it's indeed true. We give you the amount that would be payable when you are starting to receive your benefit at normal retirement age. So if you need to have an estimate of how much you would get if you start receiving it earlier, please reach out to us through our Contact Us form. We will have to do that for you manually until our estimate tool provides this type of estimate. I think I answered the ones I published, Dilbar, so I'll hand over to you. Thank you.
Thank you, Denise. All right. So I see a number of questions again about the timeline, the documents that are needed for the fund to process a benefit. So maybe I'll share my screen now for a brief moment and go over the resources that are available on our website. So if you go to our website, UNJSPF.org, we do have a page dedicated for separating staff members. So if you click here, separating or retiring, there is a page named separation. So here we really in detail describe the whole process of what is needed from you, what is needed from your employing organization, what you can do to start preparing for your separation, etc. So we've developed this very easy to use checklist that will guide you through the process. I would recommend that you download it and go through the steps to help you through the process. And here we've divided the process based on the three main players: participants, you and your employing organization, and then the fund. So for participants here, some of the things you can do to ensure that your data is correct by going over your pension statement, and then if you see any discrepancy, please report that to your HR. In terms of the documents that are needed from you, it's of course your payment instruction form, and depending on whether you have 5 years or less of contributory service, different payment instruction will be applicable to you. So if you are someone who is separating with less than 5 years, the form that you need to fill out is PENS E6. If you are separating with at least 5 years of contributory service, then you need to fill out PENS E7. Then in all cases, we'll need a recent bank document that will support the information that you put in your payment instruction form, like the name of your bank, the bank account, etc. It could be a bank statement, a recent bank statement, or a voided check. All we need is to verify that indeed the bank account is under your name and the banking information, like the bank account, that to ensure that we are paying to the right account. We'll also need a copy of a valid government issued ID. It could be your passport, driver license. Then, if you are electing a pension benefit, it could be either an early retirement or normal retirement benefit, then we'll need some additional documents, and they're listed here. We'll need a copy of a valid ID for your spouse, a marriage certificate if you're married, a divorce decree, a copy of a divorce decree if that's applicable to your case. If you have children under the age of 21, etc. So all of these documents are listed on our website. Then you can see here what are the responsibilities of your employing organization. So they need to send us 2 documents in order for us to start processing your documents. One will come from your HR and one from your payroll office. And then what is the responsibility of the pension fund? And I believe the timeline is indicated somewhere here, but it is 15 business days, as I mentioned earlier, 15 business days from the time we receive the latest separation document. And provided that all of the documents are completed correctly and there is no discrepancy in your file. There was also a question about the payment instruction form, and you can find them inside your member self-service account under eForms tab. They're also available here under resources on our website. If you click on forms, for those separating here, there are these payment instruction form that I mentioned. We'll also have some tutorial on how to fill them out. So for example, if for those separating with less than 5 years, PENS is 6, it looks something like this. If you are downloading it from your MSS account, this information like your UID and your name will be populated already. So depending on the choice, whether you want to receive a payment right away or you want to defer a payout, you need to fill out either page 1 or page 2. If you want to defer the payout of your benefit, you just need to submit to the fund page 1 only. So you'll just provide us with your contact information, date, and hand sign it and submit it to the pension fund. If you want to receive your withdrawal settlement right away, if you don't want to defer the payout for up to 36 months, submit page 2 only. Do not submit page 1. So page 2 only, and here you will just let us know the banking information, where you want to receive this payment, in what currency, and also put your contact information so that we may contact you in case there is a need. Date and hand sign it, submit it to the pension fund via one of the official channels, together with your valid government issued ID and a banking support document. So that's for those separating with less than 5 years. For those with more than 5 years, you will go to PENS E7. And again, if you want to defer the payout or making a benefit election for up to 36 months, fill out page 1 of the form only and submit it to the fund. If you already know what you want to elect, ignore page 1. Do not submit page 1 to the pension fund. Go straight to page 2 and 3, and here indicate what your what you would like to elect, depending on the choices available to you. So if you are someone who is separating at or after reaching their early retirement age, but did not reach their normal retirement age, you will have an option to receive either an early retirement benefit or deferred retirement benefit or a withdrawal settlement. So make sure that you only tick one of these boxes, date and hand sign it. If you are electing an early retirement benefit and you want to receive a lump sum, then you and you want to receive a maximum lump sum, then you just click this box here, date and hand sign it. If there is a particular amount that is less than the maximum lump sum that you're entitled to that you wish to elect, then you indicate this amount here in this box, and then click here, date and hand sign it, etc. Then you go to page 3, and here you tell us where you would like to receive your monthly benefit, and If you are entitled to a lump sum and you wish to receive a lump sum and you wish to receive it in a different bank account than your monthly lump sum, then you indicate this information here. Also, please make sure that you indicate the currency in which you would like to receive these payments. If you do not indicate anything here, we'll assume that you want to receive them in US dollars. And then again, very important that you provide us with your contact information so that we may be able to reach out to you if there are any questions. And date and hand sign it again. Very important that it's hand signed, as the fund does not accept electronic signatures. Date on this page, on page 3 and page 2 should be the same. And then submit it to the pension fund. If there are questions about how these forms can be submitted, we do have a dedicated page on our website. Sorry. And I believe you can find it under Contact Us, about how you may submit documents to the pension fund. So here we'll list all the ways that you can do so. If your organization allows you to submit your separation documents using the member self-service, you can do so. This is the fastest and easiest way for you to submit these documents to us. Once you submit them through your member self-service, there is no need to send the originals. However, we advise that you follow instructions of your employing organization closely. Sometimes they would like to receive them first and submit them together with their documents, so make sure that you follow their instructions. You can also, an alternative is to mail them to us, and we list our mailing address here. Or if you're stationed in New York or in Geneva, you can drop them off in person during the walk-in hours. There was also a question about what if I do have a personal question and I would like to how can I address them to the pension fund? So here again, under the Contact Us page, we do list all the ways you can contact us. It can either be in writing. You can fill out the contact form, and by doing so, you will receive a written confirmation that we received your query with a ticket case assigned to you, together with the expected timeline when you should receive a response from us, and you will receive a response from us in writing. You can also call us. We do have more than 70 toll-free numbers available, depending on where you are currently stationed. So you can talk to us over the phone. And again, if you are in New York or in Geneva, you can come, or even in Nairobi, you can come and visit us in person. Make sure that you consult this page just to make sure that we are open. And this is it from me, Denise. Over to you.
Thank you. Okay, I've picked out a number of questions, and the first one has to do with bridging. Using special leave without pay to bridge. We had a special session about this, so in addition to my answer today, I would encourage you to look at the page on our website where the town halls are recorded. The links are available to the different sessions, and we have one that was on special leave without pay. But the question is, I've been offered to bridge to the early retirement age through special leave without pay. I understand I need to cover the costs, both the employer and employee. That's correct. What do I need to do to make this process in motion? Or is it my agency that will liaise with the pension fund? So if your employer is offering you the possibility to bridge a period using special leave without pay, then you make the arrangements with your own payroll office. and you need to make the payments of the contributions through your employer. So assuming you're going to be paying contributions during that period, the fund will actually receive them as usual because you'll be paying both your share and the employer's share. So you need to make the arrangements with your employer before you start the special leave without pay, and you do have to make the payments concurrent with your leave. Okay, then we had a question about my normal retirement age is now, whereas my mandatory age of separation is in 3 years. Do I need to submit my pension documents now or later when separating? So even though you're now entitled to a normal retirement benefit, I'm assuming your normal retirement age is 62, you're allowed to work until age 65, the mandatory age of separation. So you don't need to submit the pension documents, the separation documents to us until you're separating from service. You will be entitled to a normal retirement benefit already, and then at the date that you separate would be when that's what we use to determine the amount of your pension benefit. So in short, you only submit the documents when you're separating and not now. Okay, the next question. This is also related to special leave without pay and bridging. So I'm with a closing down mission and separating at the end of 2026, and we'll have 23 years of contributory service. So if there's a possibility to use special leave without pay to bridge the 2 years to reach 25 years of service, is that still practical when there will be no mission or post to lean on? So the point of bridging a period to reach 25 years of contributory service would be mainly if you're trying to reach the 25 years of contributory service so that if you're separating on early retirement, meaning you would be taking an early retirement benefit, you will benefit from a lower reduction factor. We go into more detail about this in our town halls where we talk about the early retirement benefit, and you can refer to those if you'd like to see the details about the different reduction factors that are applied. But if this is your situation that you would be taking an early retirement benefit when you separate, then you would have to do some comparisons of what your benefit would be if you separate with 23 years of contributory service, and you could run an estimate and see what the benefit would be, and then compare that with separating after 25 years of service, but considering that you yourself will have to pay 3 times the amount per month in contributions than you usually do, because you'll be paying your share and your employer's share. And then you'll need to decide if that's really practical for you for the purposes of getting an early retirement benefit with a lower reduction applied. So please feel free to reach out to us for some assistance if you need that in trying to figure out the different amounts that you would be getting if you don't understand the estimates. Okay. The next question. I understand an official benefit letter will be issued. What information will be included in this letter? So when you separate from service and your benefit is calculated, and you have some form of retirement benefit, you will have an official benefit letter that, in case of early or normal retirement where you're getting a payment upon separation, your benefit entitlement is the day after separation. What you'll see in this official benefit letter will be, it will give notice of what we received as your separation date. and what your full length of contributory service was, and what your total amount of contributions to the pension fund was over the period of participation. Then we have information about the benefit amount that you will be getting. And after receiving your payment instruction form, we will know whether you chose a lump sum option, for example. So there will be information about how much your lump sum was, and then how much your resulting monthly benefit will be, and if there's any retroactive amount payable. So all of that will be on the official benefit letter, as well as your official mailing address, which you will have provided to us, and it will be in that letter as well. This official benefit letter, though, is not mailed out really anymore. It's available in your member self-service account under documents. So it will be produced only once your benefit's been calculated. Okay, the next question is about restoration. So just generally, restoration is a process where you pay back to the fund a benefit that you received when you separated from a prior period of participation. And by doing that, you are putting back the years of contributory service that you had from your prior period of service. So in this question, restoration, I joined the UN in May 2009 and separated in March 2015. So, of course, I don't know the details, but that's approximately 6 years. And they took a withdrawal settlement. In August 2025, the person rejoined, and they plan to separate before 2029 because of retirement age. So that's less than 4 years, or around 4 years foreseen. Can I apply for restoration by reimbursing the withdrawal settlement with interest? So most likely, without knowing exactly the details of your case, I'm assuming yes, but be aware that you'll need to make the request within 1 year of re-entry, so before August 2026. And the question is, how do I do that? You can request it, you can start the process through member self-service. There is a place there where you can choose restoration, and then we will contact you. We will let you know if you're eligible, and then eventually give you the amount due to pay back to the fund if you choose to restore. And the other question, which I didn't, am I still eligible for pension? So I'm not quite sure if that means you restore, you're eligible for your pension when you separate again. I'm not quite sure if I understood but just be aware that for restoration, yes, you have a 12-month period from re-entry to request it. So please do go through the member self-service, or if you need help, you can reach out through us, through contact us, and let us know that you would like to know about restoring your prior or restoring your withdrawal settlement. Okay, the next question. I separated on 31 December 2025 after more than 5 years of contributions to the fund. I'm 57 years old. What options do I have for contribution? Can I wait till I'm 58 for early retirement benefits? So I'm understanding that your early retirement age is 58. If that's so, then if you separated before you reached your early retirement age, then you're not eligible for an early retirement benefit. So your entitlements are determined at your separation date. And if you had more than 5 years of contributory service, based on what I see in the question, you would be entitled to either a withdrawal settlement or a deferred retirement benefit. And the earliest you could start receiving that deferred retirement benefit would be age 58, if that's your early retirement age. But it would be reduced because you would be taking it before you reached your normal retirement age. And currently the estimates do not allow you to figure out what that reduction would be, because it just shows you what the amount of your benefit would be if you take the benefit at your normal retirement age. So if you run an estimate with your actual separation date, you'll see what your options were. And the next question is changing gears a little. When are monthly payments issued? So assuming you are entitled to a monthly pension benefit in the regular scheme of things, so not necessarily talking about your very first payment, but the monthly payments are issued at the end of each month, and they are in arrears. So you, depending on your bank, you might get it a day later or maybe a couple days later. So it depends on other factors like that, but it's you're paid on the last, I believe it's business day of the month. And then the next question, I'm about to separate from my organization after 4 years of service. Do I have both options of getting my contributions back and parking it for when I might join the organization in the future? And if I can leave it with the fund, for how long can I do so? So I think we've touched upon the question, but just to clarify, if you have 4 years of service, you're separating, regardless of the number of years of service you have, when you separate, you do have up to 36 months to make a benefit decision or choice. You can leave the money with the fund up to 36 months from your separation date. If you rejoin the fund within that 36 months, then your contribution, your participation is just considered continuous. You don't have to have two separate benefits. You don't have to think about restoration or anything like that. Your participation will be continuous with this period in between that you did not contribute because you were not employed. If within that 36 months, you want to have your contributions back, so you want to take a withdrawal settlement, you can submit your payment instructions and request the payment of your withdrawal settlement. In which case, even if you did come back into the fund within 36 months from separation, then you would have to requalify for participation. And if you wanted to add the prior service, you'd have to restore the withdrawal settlement. The next question is again about the rejoining after 36 months after separation. So if you rejoin and you're back in the fund within 36 months from separation and you did not take a payment, your participation is considered continuous. So you'll still have the same normal retirement age. You will just have this period when you were not employed that you do not have contributions paid. What happens to my previous pension participation record? If you rejoined within 36 months and you didn't take any pension benefit payment when you separated the first time, then you, as I said, you'll just have a continuation of your participation under one record. Will my prior contributory service be automatically reactivated, or will a new pension account be created? So if it's within 36 months, it will be one record and it will be automatically just continued under the same record. If, however, you have a break of more than 36 months, then you will have a new, say, pension account, and you'll need to make a benefit decision about your first pension participation. when you have that scenario, then your new period of participation would have whatever the normal retirement age is, which now currently is 65, age 65. So you could possibly have 2 different retirement ages if you have 2 periods of participation. The next question, how long does it take the lump sum pension amount? How long does it, I'm not sure if that means I'm assuming this is the lump sum, which is part of a retirement benefit, but I'll answer for both questions. The lump sum portion, if you have a retirement benefit and you choose a lump sum with a reduced monthly amount, the lump sum portion is normally paid through weekly batches that of the fund's payroll, meaning that they pay the payroll at the end of the month for the monthly benefits, and the lump sum portion would be paid through a weekly batch. If you are referring to the withdrawal settlement, then that is also paid through a weekly batch. In general, the payment of your pension when you separate from service depends on when we have all of the separation documents, and that is something which we cover in our town halls. And we also have all of this information on the separation page on our website, which will explain to you the mandatory separation documents and frequent reasons why someone's pension is delayed, if there are discrepancies in the record, for example. But generally speaking, the fund processes more than 90% of the benefits within 15 business days of receipt of all of the mandatory separation documents, assuming there's no discrepancies. Okay, the next question. I've been working with the UN for 26 years and expect to retire in about 4 years. I would like to know if I were to pass away before retirement, would my pension benefits be transferred to my children? So if you're an active participant, so you're a staff member and you're an active participant, and you pass away, who will get your pension benefit? What will happen to your pension? If you do have children who are under age 21 that are your recognized dependents, in the event of your death, they would receive a child's benefit up until the age of 21. If you have a spouse that is, you're in this scenario, you pass away while you're in active participation, that spouse would receive a survivor's benefit for life. So the survivor's benefits is also a separate topic which we cover and which we have a lot of information on our website. If you'd like to look under the topic of survivor's benefits, I think you could see the different types of survivor's benefits payable. So death in service in this scenario, if you have children under age 21, if your children are over age 21 and you're not married, then you don't have a secondary dependent or any divorced spouse who would be entitled, then your pension would be paid as a residual settlement. So all the money that you'd paid into the fund from your own salary would be paid to the person you designated as a beneficiary as a one-time payment. Okay, I think I've covered all my questions, but let me see. Yeah, I think I've covered mine. Dilbar, I can hand back over to you. Thank you.
Thank you, Denise. So there was a question, I think it's a very important question. Let me just try to find it, about, okay. Could you please advise on the best practice in the situation? I contributed to the UNJSPF for 19 years and separated at the G6 Step 12 salary scale. I elected, I'm assuming, deferred retirement benefit based on the best average G6 remuneration. If I am reemployed within 36 months at a lower grade, G4 or G5, my salary would decrease by about 30 to 40%, and continuing contributions under the same UNJSPF account would reduce my accrued retirement benefits. Is it possible to open a new UNJSPF account upon reemployment so that my original deferred retirement benefit remains intact? So the answer is no. If you, upon separation from service, you elected a deferred retirement benefit and we process this benefit, but then you come back into the fund's participation by finding another employment within 36 months and we did not start paying you your deferred retirement benefit, we will cancel that benefit and you will continue your participation under the same pension account. So unfortunately, if you gain employment at a lower grade, yes, that will have an implication on your future benefit entitlement. So please be aware of that. It will be against our rules to open a new pension account for you should you come back into participation within 36 months. So unfortunately, yes, the answer would be no to that question. There was also a question about a PF4. If there is a delay from member organization to issue a PF4, and that's causing a delay in benefit processing, is there anything that the fund can do? You can reach out to us. We can try to contact your employing organization to see if there is anything that can be done to expedite the issuance of that document, but again, there are no promises on the fund side. We advise that you work very closely with your organization. If you need to reconcile your leave, or you need to return, or there is an overpayment on your side, try to work with your organization to clear that those discrepancies so they can issue those two separation documents as soon as possible. There was a question about using UNFCU bank account to receive a benefit. Yes, you can do so. The fund can pay to any commercial bank all around the world, provided that there are no sanctions. There was also a question about once the benefit is in payment, so once we start paying you a retirement benefit and somebody wants to change a currency of payment, whether they can do so and how often they can do that. Yes, you can at any point change your benefit payment instruction once we start paying you your benefit. If you want to receive it in a different bank, or if you want to receive your retirement in a different currency, you can submit to the pension fund a form called PF23. And there you will indicate your new banking information. And with that, we will also need a supporting document from your bank and a valid government issued ID. You can change your payment instructions once a year. We don't advise you to do that, to do more than that. There was also a question about what if a participant dies in service and there are no survivors, what happens to their contributions? So if you die in service and you don't have any survivors, the fund then will process something called a residual settlement, which will consist of your contribution and interest that you've earned, and will pay that residual settlement to whoever you designated on the form called A2. You should be submitting that form as part of your separation, or when you first joined the pension fund, you should have submitted that form to us. If you haven't done so yet, you can still do that. Again, the form is called A2, and you can find that form inside your member self-service under e-forms tab. Make sure to fill it out, date and hand sign it, and submit it to the fund using member self-service if your organization allows you to do that. There was also a question about how many years of service does the staff member need to have in order to qualify for a pension benefit. Again, to be entitled to a form of a retirement benefit, you need to contribute to the pension fund for at least 5 years. A type of a retirement benefit you may be entitled to will depend on the date of your separation, whether or not after having contributed to the pension fund at the time of your separation, you have reached at least your early retirement age or not. There were some questions about special leave without pay, and I know Denise covered most of them. I just want to again refer you to our website. I'm going to share my screen, where on a dedicated page, we've summarized everything you need to know about special leave without pay and how it can be used for bridging purposes. If you click on participating in the fund and look for a page called special leave without pay, here we have also put a link to the dedicated town hall session that we held last year. Also, we've put the options that you have and when one would consider using special leave without pay in a bridging context. So you will find a lot of information in a simple language on this webpage. There was a question about what if you find a discrepancy in your annual pension statement? Somebody said that I have contributed for over 24 years uninterrupted, but find in the annual statement a gap of non-contributory period of 4 months. I never had a break in service or contribution. I sent several messages to UNJSPF and I'm yet to receive a response. I'm very sorry that you haven't heard back from us. It's very hard to, without knowing the details, to see what's going on, but we'll, if you can perhaps contact us again, we will try to find, to look at your file to see what's going on. Sometimes it could be that, yes, maybe there was a missing record in your file, so that we can take a closer look and see what's going on there. And I apologize for the delay. I think these are all the questions that I had. Denise, over to you.
Okay, thank you. Let's see, where did I get? Okay, I guess I'll start backwards. Someone asked about the lump sum field in our estimate, the estimate tool. So if you're in member self-service and you want to run an estimate, you will see the field where you put in your separation date. So that is a date field. You have to put in a separation date. And underneath there is a field called lump sum. The lump sum is an option only if you're entitled to an early or normal retirement benefit. So we recommend that you don't put anything in that field when you run your estimate the first time. and you put in the separation date, and then you look at your estimate and you'll see what benefit options are available to you based on that separation date. If you have an entitlement to an early or normal retirement benefit, the estimate will default to the maximum lump sum possible. And then it will show you the yearly amount of the periodic benefit that would be payable to you if you choose that maximum lump sum. If you want, you can choose a lower lump sum amount. Then you could go to the estimate again and put in a fixed amount of a lump sum. If you're not entitled to an early or normal retirement benefit and you run the estimate, then entering something in that field will not have any results, because that means you're entitled to either a withdrawal settlement only or a withdrawal settlement and a deferred retirement benefit, which does not have a lump sum option. So that is why I'm assuming you don't have any results when you put in a lump sum amount. If you are, it's because you don't have an entitlement to an earlier normal retirement benefit at that date of separation that you've entered in the estimate tool. Okay, the next question is, for separating staff who've reached 5 years of service, that means that you're vested for pension rights, meaning that you would be entitled to some form of a monthly pension benefit for life when you separate from service. So in this question, they're eligible for a pension benefit at an age of retirement, but who will fare from retirement in 20 plus years? Will the pension allowance that we receive at retirement age be adapted to inflation over the years? And then there's an example. So if you have some form of a monthly pension benefit, it is adjusted for cost of living over time. Our pension fund is a US dollar-based fund, and benefits are calculated in US dollars. And the cost of living adjustments are based on the consumer price index of the United States. So usually in April, there is a cost of living adjustment applied to the dollar value of your benefit. So even if you're receiving it in another currency, it's there's an adjustment to the dollar value, which would mean that your benefit is adjusted over time for cost of living. The next question, can you please explain the different options depending on the years of service at the time of separation? So firstly, one of the main differences to be aware of is if you separate with less than 5 years of contributory service, you will not have an option for a monthly pension benefit. Your only option for a benefit would be to receive your own contributions and interest back. If you do separate with 5 or more years of contributory service, then you'll have some form of a monthly pension benefit available to you. And the type of monthly benefit option that you'll have will be based on how old you were at separation. So if you separate from service with more than 5 years of service and you're not yet early retirement age, then your monthly pension benefit option will be what's called a deferred retirement option. And that's not actually payable upon separation. You have to be at least early retirement age to start receiving the benefit. By default, you start receiving it when you reach your normal retirement age. So let's say you separate at age 53, your normal retirement age is 62, and you've worked 10 years and contributed 10 years. You separate from service, you want a monthly pension benefit, but you're not yet eligible to start receiving the benefit until at the very earliest you reach your age of 55. So the question goes on about what changes are after closing 10 years of service. There's no change at 10 years of service per se. The main thing to know is 5 years or more, you'll be entitled to a retirement benefit. Under 5 years, a withdrawal settlement. And with regard to the withdrawal settlement, if you have more than 5 years of contributory service, then when you separate and take a withdrawal settlement, you will receive an extra 10% on top of the amount of your contributions and interest. So the details of that also available in our presentations on separating from service and preparing for retirement. So those calculations are in our slide presentations there. Next question is about interest. So your contributions are accruing compound interest at a rate of 3.25% per year, while you are an active participant. Once you separate from service, even if you leave your contributions with the fund, they do not, you do not continue to accrue interest on your own contributions. So in this question, will the interest keep accumulating on my total contributions while I opt for the deferred pension benefit at the age of 55 or 62? So let's say you separate, you've got more than 5 years of contributory service, and you choose a deferred retirement benefit. So you separate, your money stays at the fund. The interest stops accruing at your separation date. But once you reach age 55, the cost of living adjustment will be applied to the amount of your benefit. So the amount of your pension benefit, by default payable at your normal retirement age of 62, in this case, it's determined based on that date that you separated. And we assume that you're going to wait until you're 62 to start receiving the payment. But already by the time you reach 55, we start applying cost of living increases to that amount of your benefit, even though it's not in payment yet. Next question. If a staff member has completed more than 10 years of service and is separated, for example, at age 48, can the staff member defer receipt of their pension until reaching age 55 in order to become eligible for pension benefits? So if you have more than 10 years, that means you're vested for pension rights, you are entitled to some form of a monthly benefit, and you separated at age 48, then you're going to be given the option of a deferred retirement benefit. So you can only start receiving it as early as age 55. So that is, I think, the scenario here. Can you defer receipt of your pension until reaching age 55? That is the only option you would have if you separate at age 48 with vested pension rights. So you would have a reduction to the benefit because you're taking it already at age 55. And again, if you run your estimates, you'll see the amount payable on a yearly basis at age 62, if that's your normal retirement age. So you can start taking it as early as age 55 with a reduction applied to that. The next question, can you please explain the penalties for someone leaving at age 56 with 25 years of contribution to the pension fund, normal retirement age being 62? So your normal retirement age is 62. That means your early retirement age is 55. And if you separate with 25 years of contributory service and you're 56, already at separation, you're entitled to choose an early retirement benefit. So the penalty, if you want to say a penalty, is that you're leaving before you reach age 62. So we go into more detail about how much reduction is calculated in the in determining what your early retirement benefit would be. But you don't have to do these calculations. It's already factored in when we provide the estimate to you of what your early retirement benefit would be when you separate at age 56. But just generally speaking, there are different reduction factors. If you have less than 25 years of service when you separate, it's a 6% reduction for each year that you are separating or receiving your benefit before reaching your normal retirement age. So in this scenario, there's a 6-year difference between age 56 and 62. If you have 25 years of contributory service, though, you have a lower reduction factor of only 3%, which would be applied for maximum 5 years, meaning you would have a smaller reduction, but you don't have to do any of this calculation. So I would just recommend run your estimates with your actual separation date that you expect, and you'll see the amount of your early retirement benefit payable upon separation. And you'll also see a deferred retirement benefit option if you wait until age 62 to start receiving it. Next question. From the pension viewpoint, what are the impacts of separation before age 55 if you've completed 25 years of service? Well, if you separate before you reach age 55, which I'm assuming is your early retirement age, then you will not have the option of an early retirement benefit yet at all, because your entitlement is based on your separation date. So if you separate before reaching your early retirement age, then your only benefit option in the form of a monthly benefit would be the deferred retirement benefit. So the question goes on, for those who have not completed 25 years of contributory service, as long as you have at least 5 years of contributory service when you separate, but you separate before reaching your early retirement age, then your only form of a monthly benefit that you could choose would be the deferred retirement benefit. And whether you have 25 years or 20 or just 5, it's the only option because you're leaving before you reach early retirement age. And the next question, I think that might be all, because I think those might be your questions, Dilbar. Yes, I think it's your turn now. Thank you, Dilbar.
Thank you, Denise. Okay, so we received a question about a deferred retirement benefit. Once it becomes payable, what documents should be submitted for the fund to start paying that benefit? So if you, at the time of separation, if you elected a deferred retirement benefit and now you reached your normal retirement age, which could be either 62 or 65, and you want to start receiving that retirement benefit, you need to submit to the fund at least 30 days before this benefit becomes payable, so 30 days before you reach your normal retirement age, the following documents: your payment instruction form, and that form is called PF23A. You need to fill out that form, and your signature on that form needs to be authenticated. In addition to your payment instruction form, we require that you submit your government-issued ID, which should be valid, and a supporting document, a bank supporting document, which could be either a void check or a recent bank statement. And once you submit that, it would take the fund approximately 15 business days to implement your benefit. Another question was on member self-service estimates, whether or not it will include information for 2025, or it's only up until 2024. So the fund is currently in the process of processing your financial data for 2025, which includes your pensionable remuneration and the contributions for that year. It's very hard to say right now whether or not, if you run today your estimates, the 2025 data will be incorporated or not, because the fund is on a daily basis is in the process of updating the pension accounts. So your data might have been already updated. So if you run it today, you would see the information with incorporated 2025 data, or it may not. It's very hard to say. So I would say, to be on the safe side, please wait until May to run your estimates if you want to make sure that the 2025 information is included. And the only importance for 2025 data is if you had, let's say, promotion. If there were no changes in 2025, then you can run your estimate with confidence that the 2025 data is also projected, because we will project it based on 2024. So if there is no changes in 2024, we will take that into account in MSS estimates. There was also a question about somebody ran an estimate and they're seeing next to their option a prospective survivor's benefit. They're also seeing child benefit. So it's a little confusing what it all means and what is exactly payable. So what is payable is the benefit that you are entitled to, whether it's an early retirement benefit or a normal retirement benefit. The value that is shown in estimate is a yearly value. So you will have to divide it by 12 to get the monthly pension. If you are entitled to a child benefit, then that value will also be reflected in your MSS estimate, and it's also in its yearly value. So if you are entitled to a normal retirement benefit, and you have a child under the age of 21, you will see a yearly value. So divide that value by 12, you will be receiving that the 12th of that value in addition to your pension every month. If you are entitled to an early retirement benefit and you also have a child under the age of 21, we will start paying you child benefit, but only at your normal retirement age, provided that your child is still under the age of 21. Okay. There was a question about, so what if a separated staff member is reemployed by the UN after completing the pension forms, but before receiving the first monthly pension? How can the continuation of the contribution in UNJSPF be arranged? So if you rejoin the fund's participation by gaining an employment with a member organization, within 36 months from your separation from previous service, and we have not yet paid you a benefit, even though you've submitted all the documents, if we have not started paying your benefit, we will cancel any calculations that we started, and you will have a continuous participation. So you will continue contributing to the same pension account that you had before. However, if we already started paying you benefit or paid you your benefit, then you will start a new participation, even though you rejoin the fund's participation within 36 months. So I hope that answers the question. Let's see. I think this was it from my side. Over to you, Denise.
Thank you. I think I've got some similar questions. So just to continue on the topic of, you separate from service, you've submitted documents, but your pension hasn't been processed yet. If it's not in payment yet and you return into active participation, then we would not put your benefit into payment from your prior participation, because you can't be a participant at the same time as a retiree. So we sometimes have people who are retirees in receipt of a pension, and then they come back into active service and they're back in the fund as a participant. Then we suspend their pension benefits until the time that they again separate from service. So just be aware, you can't be in receipt of a monthly pension and again a participant in the fund at the same time. So then the next question was about the breakdown. I think you had a similar question, or you pretty much answered it, about the full pension, the prospective survivor, and the child's benefits. So the amount that you would receive is the pension benefits divided by 12. And then if you have eligible children that are in receipt of a child's benefit, then that amount divided by 12. And the prospective survivor benefit is only going to be payable in the event of your death. So that is just to indicate to you how much the prospective survivor would get. And we have another question about really the deferred retirement benefit scenario. So if you separate at age 54, can you go into retirement at age 57, for example, or should you wait until age 62? So if you separate at age 54 and you have at least 5 years of contributory service, then your monthly benefit option is going to be what is called a deferred retirement benefit. Because you're separating at age 54, you're still too young to start receiving that benefit. So by default, you wait until age 62 to start receiving it. If you do choose to start receiving it at age 57, for example, so earlier than your normal retirement age, you can do that. You have to reach out to us and you submit the form that would indicate that you want the deferred retirement benefit to go into payment. But you will receive less for life than if you wait until age 62 to start receiving your benefits. So it would be up to you to decide whether you need the income sooner than your normal retirement age. And I think we've mentioned that the estimate doesn't show what you would receive if you start taking the benefit early. So you can reach out to us to ask us about the amount of your benefit if you're going to start receiving it before your normal retirement age. We have had a couple questions about disabled child, and I won't go into a lot of detail here because, I mean, this is more to address questions about separation, but it is important for you to realize that when you're separating from service, if you have a child who is disabled and you are receiving most likely some special child's allowance for that disabled child, you will want to notify the fund of this child, who would then need to be reviewed by the pension fund to establish the eligibility as a disabled child. So that I'd say would be the answer to the one question about recognizing a disabled child. Yes, please reach out to the fund to ensure that this child is reviewed for recognition as a disabled child. If the disability is approved, then it's possible that this child would receive a child's benefit beyond age 21, which is the normal cutoff date or age for a regular child's benefit. And the related question is about how the payments are made when you have a disabled child. If you are in receipt of a retirement benefit and you have a disabled child who's eligible for a child's benefit, then that is also a monthly benefit. There's no lump sum for a child's benefit, regular or disabled child. So it's a monthly benefit. Another question is, oh, I think I actually already answered all of my questions. So let's, Dilbar, if you have any to answer, I'll go back to the list that's pending. Thank you.
Thank you, Denise. There is a question from Jerome. I worked with the United Nations until 2020 and secured a pension under the 62-year framework. In 2023, I started working again with the UN. My current contract will end in March 2026, giving me an additional 2 years and 8 months of contributions. Will I be eligible for a pension under the 65-year framework? Or do I need to complete 5 years of contributory service to qualify? So Jerome, if you have already been qualified and elected some form of a retirement benefit for your previous participation, which ended in 2020, and it's not yet in payment, or it was in payment but then paused because you have rejoined the fund's participation. For your new participation period, you do not need to have a 5 year of contributory service in order to qualify again for a type of retirement benefit for this new participation. So at the time of your separation in March of 2026, you will have already your established retirement benefit. And for your new participation, you will be given a choice to either receive a form of a retirement benefit or to take a withdrawal settlement as a one-time payment. Another question which I can't find was on the withdrawal settlement and how it's calculated, whether if there was a break in participation, and how we will calculate, the additional years in excess of 5 years in order to calculate the additional interest to be given. So when we calculate a withdrawal settlement, and if you have more than 5 years, as Denise mentioned, you are entitled to get an additional 10% on your contribution and interest in excess of those 5 years. And when we look at the totality of your service, we'll only look at the contributory service. We will not take into account the break-in service. And unfortunately, the break-in service it cannot be made contributory in any scenario. Let's see. Do you see any questions?
Yeah, I mean, I see a few that are related to the 2-track, which is, yeah, really a very specific topic. I can just touch upon a few of those for now. Let me just put them in the published section. Let's see. Okay, so the question was, one was very specifically referring to the local track or dollar track, and the other referred to country of residence. So without going into great detail about what we call the two-track system, I'll try to answer these questions. When you are in receipt of a monthly pension benefit, your benefit is calculated in US dollars, and the amount that you'll see in your estimates and on your pension statements while you're an active participant is all reflected in US dollars. If you are living in France or Switzerland, because those are some of the countries that are in the question, you might have been paying your contributions in a currency other than dollars, but that those contributions are then converted into US dollars into your pension account, and by default your pension will be calculated in, and it's paid in dollars. So let's go to the questions. I live in the euro area. Given the current financial uncertainty related to the dollar, would it be better to choose the local track or dollar track? So by default, you're on the US dollar track. Your pension is determined in dollars. And if you're receiving it in euros, which you will most likely have noticed fluctuations in the exchange rate between the dollar and the euro. We have an optional system for our retirees and beneficiaries called the two-track system. And this is a system that is meant to adjust your benefit for cost of living in a country that you declare as your country of residence, and to prevent large fluctuations in due to the exchange rate between the currency of your country of residence and the dollar. So by default, your benefit is on the dollar track, and it's following the consumer price index in the United States, and the cost of living adjustments are based on that from the United States. If you go on this optional system, you choose to go on it, you're declaring a specific country, let's say, as in the examples, France or Switzerland, then you want to have your benefit also calculated based on the cost of living index in that country. And then there's a comparison so that you will be guaranteed a certain minimum, but it's also capped, so that you don't have great fluctuations in your benefit that you're receiving in a different currency from the US dollar. And I can't give you advice about what would be the best track. What we always tell people is your benefits amount's going to be determined at your date of separation. And only once your benefit's in payment can you really run estimates and see what the value would be if you were on the two-track for a particular country. Not all countries allow the two-track, but for example, France and Switzerland do. So these are the countries in the question. You could run estimates to see what your benefit amount would be if you were on the two-track for France or Switzerland. And then you can make a decision if you want to go on the two-track system. Then the question about your pension before tax will vary depending on whether you decide to retire in Switzerland or neighboring France. Yes, so if you have your pension in dollars and then it's tied to your country of residence because you go on the two-track system, then your benefit would be calculated based on the consumer price index of Switzerland or France. And then you would need to see whether you want to do that. If you want to go on the two-track for that country. If you go on the two-track system, you are on it for life, pretty much, in most cases. And so even if you move countries, then you stay on the two-track system. You have to prove that you're residing in that country. And there are other requirements and that you would be informed of. And as I mentioned, you would establish a maximum, a cap, and a minimum amount to your benefit in the local currency. We have a lot of information about the two-track. We have videos, information videos, and we have brochures and just pages of information on our website, which can help you to understand the two-track and also how to run the estimate for two-track so that you can make an informed decision. So that's what I would suggest to you. You need to know what your benefit's going to be at separation, and once your benefit's in payment, you can run estimates for two-track and then make a decision to see whether it's the right choice for you. So back over to you, Dilbar.
Thank you, Denise. I just published a very long question. It was addressed through other questions, but maybe I'll go over it again quickly. So rejoining after separation, if I rejoin UNJSPF participating organization 36 months after my separation, what happens to my previous pension participation records? That will depend on whether or not you have made a benefit election within the 36-month deferment period. So if you haven't, and at the time of your separation, you had less than 5 years of contributor service, then at the time of you rejoining, you will be given two options. You can either receive that withdrawal settlement, or you can auto-restore that period and make it part of your current contributory service. If you have more than 5 years, if you had more than 5 years of contributory service at the time of your separation, and you did not make a benefit election within the deferment period of 36 months, then the fund will assume that you have elected a deferred retirement benefit, which is normally payable at your normal retirement age. Does a break in service affect my normal retirement age or benefit eligibility? Yes. So your new entry date into the fund's participation will determine your early and normal retirement ages. So currently, for everybody who is joining the fund after 1 January 2014, the early retirement age is 58 and normal retirement age is 65. If for your previous participation, these ages were different, so you will essentially be starting with the new entitlements and with the new retirement ages. So deferred retirement benefit. If I elect a deferred retirement benefit and later rejoin the UNJSPF after 36 months, can my deferment decision be revoked? So if you elected a deferred retirement benefit and you come back into the fund participation after 36 months, you will be able to change your benefit election to elect a withdrawal settlement instead. However, please know that you will not be able to restore that period under Article 24. If you have a deferred retirement benefit that is not yet in payment and you come back into funds participation after 36 months and start a new period of participation, you may be eligible to restore that period under Article 24 bis. However, the practice shows that in most cases, it is not beneficial for the participants to do so. because you would be receiving more pension payout if you were to have 2 periods of participation as opposed to 1 with that restoration. However, if you're interested, if you do have a deferred retirement benefit that is not yet in payment and you became a funds participant again, you can express an interest within 1 year of rejoining to see whether or not this restoration under Article 24 bis will be beneficial to you. We will be sending you an estimate of what it would look like. We will show you what you would receive at the time of your separation should you join this 2 participation into 1 as 1 benefit payout, as opposed to what you would be receiving if you were to have 2 benefit payouts. How is my prior contributor treated upon reemployment? I just mentioned that. I mentioned a restoration. Change from international to national status if I separate as an international staff member and later rejoin as a national staff member. Does this change affect my final average remuneration? Could it reduce my future retirement benefit? So the final average remuneration looks at your pensionable remuneration, the best 36 months within the last 5 years. So if you were to change from international staff to national staff, I believe the pensionable remuneration rates are lower for national staff members. So it does have an implication, and it would have an implication on your average remuneration and your future retirement benefit. And I think that was it for me. Over to you, Denise.
Thank you. So I think we just have a small number of questions remaining, and we only have a couple of minutes, but we do have a number of questions about the fund's solvability. So I know some of you have asked whether the fund will be able to pay out the benefits that are foreseen in the future, given maybe the downsizing or the current financial environment. And please be aware that the fund is still financially strong, and the fewer participants, given a large number of people who were separated last year, for example, has not impacted the fund's ability to pay out its foreseen benefits. So the health of the fund is still very good. And the other question was about the COLA and the adjustments. I think the question is about the adjustments for inflation. So the benefits, as I mentioned, are calculated in dollars, and the cost of living adjustments are applied in April if there's at least a 2% increase from the previous adjustment. So I hope that addresses that question sufficiently. And then there was another question about the 36-month average. This is very specific about the 36-month average exchange rate used in the calculation of the amount of benefit when you go on the 2-track. So I'll just answer the person's question to say, yes, it does include the month of separation. So it's the 36-month average leading up to and including your month of separation. But I would encourage you can review the sessions that we've had on the 2-track. We have them in English and French. The recordings and presentations are available to you. And maybe at this time, I'll just go to our website to show you where those are stored. Unless Dilbar, you have it ready there, you can share. Okay, I'll try to share it before the time's up. And yeah, that is, again, a very specific topic that we have special sessions on the 2-track. And I see we only have a minute left, so let me just try to share my screen quickly to go to our website. So here under resources, we have all of the pension town hall sessions here. You can see the one we advertised that we're holding now, and a week from now we have this same Q&A format in French. So under the past sessions, you can find the links to various topics. We have one on member self-service, separating. Here's the session on leave without pay. And then in retirement is where you'll find the sessions on the 2-track. So please go there and look at the different videos that we've had if you've missed those sessions. But also, I encourage you to look under the resources, under the videos. We have videos in English, French, and Spanish, and these will cover a lot of the topics in very short, informative videos. But you can also find the information about these topics on the various pages of our website. I guess I should go to the contact us page before we leave, but the time is up. Let me see if I can just quickly show again. Here, if you haven't already registered for member self-service, please do so. And you have a page dedicated to member self-service. Sorry, that's not going to work. And if you need to reach out to the fund, the contact us page will take you to our different means and channels of contacting us. We have a contact form you can fill out. You can also phone or reach us in person in New York, Geneva, or Nairobi. But please consult the hours that we're open for walk-ins. And I think that we'll have to conclude our session. Thank you very much for attending. I hope this has been a good session for you all. And I thank everyone who's been assisting. Dilbar, you're also there if you want to say any closing words. So, no, okay. So with that, we'll close the session. Thank you all.